It's a familiar ritual, almost a reflex. You wake up in the dead of night, perhaps restless or just curious. You instinctively reach for your phone, the cool glass of familiar comfort in your hand, and open your crypto app. The interface glows, pulling you into its digital world. And there it is, the price of your favorite coin has jumped a staggering 15% while you were sound asleep. A significant overnight surge. That potent mix of excitement, the thrill of potential gains and a nagging sense of panic, the fear of missing out. Every crypto trader, from seasoned veterans to wide-eyed newcomers, knows it intimately. It's a shared experience in this digital frontier. In the early days of my crypto journey, these wild, unpredictable price swings happening at such odd hours completely baffled me. I couldn't make heads or tails of it. Why on earth would a digital currency, something that exists purely in the digital realm, suddenly surge in value at 3 a.m.? What forces were at play? Then the realization dawned on me. The crypto market, unlike traditional stock exchanges, never sleeps. It's a 24/7 global phenomenon. While you're peacefully dozing, dreaming of Lambos and moonshots, traders across the globe in vastly different time zones are wide awake, actively engaged in the market. They're executing trades, reacting to news, and making moves that send ripples, sometimes tidal waves, through the entire market. So that 3 a.m. pump that jolted you awake? It's highly likely driven by a concentrated surge of trading activity originating from another part of the world, another time zone coming online. The crypto market is essentially a global party that never stops. Someone, somewhere, is always actively trading, buying, or selling. Understanding this fundamental aspect of the crypto market, its global, always-on nature, is the crucial first step towards trading smarter and more effectively. Instead of constantly waking up surprised and reactive, you can learn to anticipate market movements and wake up prepared, ready to execute your strategy. By learning how these global time zones and their corresponding trading habits influence the crypto market, you can begin to identify and spot recurring patterns amidst the apparent chaos and volatility. This guide is designed to help you decipher and read those patterns, giving you a significant edge in your trading endeavors. But first, before we delve deeper into the specifics of crypto time zone trading, let's take a quick look at how traditional financial markets operate. Because understanding the context and the differences is absolutely everything when it comes to making informed decisions. So let's dive right in and begin this enlightening journey. In traditional finance, the structure of the trading day is carefully defined. Major markets like the New York Stock Exchange or the London Stock Exchange operate within specific hours. These exchanges have set opening and closing times, meticulously planned and adhered to. These defined periods are called trading sessions, predictable windows of time when the bulk of market activity and trading action happens. For example, the New York Stock Exchange runs its trading session from 9:30 a.m. to 4 p.m. Eastern Time, and when the closing bell rings, trading effectively stops for the day. Important news announcements, earnings reports, and key economic data are strategically released during these trading hours, concentrating market activity and potential volatility into these specific times. Globally, there are three main trading sessions that dominate the financial landscape. The Asian session, primarily represented by Tokyo, the European session, largely driven by London, and the North American session with New York at its core. Each session has its own unique rhythm, characteristics, and market impact. The Asian session often sets the initial tone for the trading day. London is known for bringing high liquidity and volume to the markets, and New York frequently delivers the most significant volatility and price swings. This well-defined structure gives traders dedicated time to rest, analyze the day's events, and plan their next moves. So, if you're a traditional stock trader, you generally don't have to worry about a sudden market crash at 2 a.m. while you're sleeping, because the market is closed during those hours. This predictable rhythm and schedule is precisely what makes the 24/7, always-on nature of the crypto market so revolutionary and potentially disruptive. Let's delve deeper and see how that changes everything we know about trading. Crypto throws out the old rulebook. There's no opening or closing bell. The market runs 24/7, 365 days a year. It's decentralized, global, and always on. Anyone, anywhere can trade at any time. This freedom is empowering, but it's also exhausting. FOMO is real when the market never sleeps. Without forced downtime, it's up to you to set boundaries. The lack of official sessions doesn't mean there's no structure. Human routines still shape the market. People sleep, wake, and work in cycles. These cycles create unofficial sessions based on global activity, so while crypto is always open, patterns still emerge. The trick is learning to spot them. Let's explore how these hidden rhythms work. Ready? Is crypto just chaos? Not quite. Unofficial sessions appear when trading volume spikes, usually during business hours in major regions. The Asian session brings activity from Tokyo, Hong Kong, and Singapore, often moving coins tied to Asian projects. Then Europe wakes up, adding liquidity and bridging Asia and North America. Finally, the US session kicks in, often with the day's biggest news and volatility. Even without a closing bell, human routines create a rhythm. These ghost sessions shape the market every day. Let's see what happens when these worlds collide. The most action-packed times? Session overlaps. When two major regions trade at once, the market gets more liquid and more volatile. The Asia-Europe overlap mixes end-of-day Asian moves with Europe's morning momentum, often confirming or reversing trends. The biggest overlap is London and New York, 4 hours of massive volume and news. This is when the largest price swings usually happen. US economic data or big announcements can move the market instantly. For traders, these overlaps are prime time. Focus your energy here, not all day. Spotting these windows helps you trade smarter, not harder. Let's talk strategy. How do you use this knowledge of global trading sessions to your advantage? It's not just about knowing when markets are open, but understanding how they behave. Don't trade 24/7. It's a marathon, not a sprint. Overtrading leads to burnout and poor decision-making. Pick your spots, especially during session overlaps. These periods often see increased volatility and liquidity, creating opportunities. Watch the news cycle. Stay informed about global events and economic releases that can impact your chosen markets. US news moves markets during US hours. Pay close attention to Federal Reserve announcements and economic data releases. Asian news during Asian hours. Be aware of key economic indicators and policy changes coming out of China and Japan. Always check for major announcements before trading. Economic calendars are your friend. Use them to anticipate market-moving events. Use stop-loss orders to protect yourself. Risk management is paramount, especially in volatile markets, especially when you're away or asleep. Stop losses can prevent significant losses while you're not actively monitoring the market. High volume doesn't always mean a good trade. Don't get caught up in the hype. Focus on your strategy. Stick to your plan. A well-defined trading plan is your compass in the often turbulent market environment. Observe how the market behaves at different times. Different sessions have unique characteristics that can influence your trading. Each session has its own personality. Understanding these nuances can give you an edge. London's open brings volume. It's a major financial hub, and its opening often sets the tone for the European trading day. New York brings volatility. The US market is known for its rapid price swings and high trading volume. Learn the market's rhythm, and you'll read its story. Market analysis is key to understanding potential opportunities. Stay disciplined, keep learning. The market is constantly evolving, so continuous education is essential. And respect the 24/7 nature of crypto. This market never sleeps, so manage your risk accordingly. You don't need to be everywhere. Focus on the markets and timeframes that align with your strategy and risk tolerance, just in the right place at the right time. Patience and timing are crucial for successful trading. You've got this. With the right knowledge and discipline, you can navigate the global markets with confidence.